Hey you guys, my name's Jeff. Welcome to the channel. If you've been here before, then welcome back. Today I want to talk with you about Google. Now this video is going to be divided into three parts. The first one, I want to talk with you a little bit about the stock market and what's going on right now. The second part, I want to talk with you about Google, the company. And the third part will be the valuation of the company's stock. Now, the reason I got this right here is this represents a pendulum. And I think a pendulum is a really great analogy. It's like a really great way to think about the stock market. The stock market, it goes from times when it's really overvalued and very expensive, and then it swings to times when it's really cheap and it's really undervalued. And then in between these times, it's somewhere in between the most expensive and the cheapest places. And you know, investors are never really that concerned or worried when stocks are very expensive. In fact, you know, think about the crypto market and the stock market a year ago. Most investors were very happy, they were very excited, everything was really high priced and going higher, and there's just a euphoria that takes over markets. So when things are real expensive, it's good times and money just flows in. Most times, the stocks trade somewhere in between the most expensive and the cheapest. But now we're over here, it seems, where things have gotten a lot cheaper. Now, we don't know if we've reached the absolute bottom or not, but things are a lot cheaper than they were even 6 months ago. And so the question is, why are people so upset? And I think this comes down to just basic human nature, which is, you know, we fear loss and we hate regret. And most of all, we just hate the idea of losing money. So if you look at your brokerage account and you see that it's down a lot this year or this month compared to last month or last year, you tend to feel a sense of regret and you try to do things to fix that. And I think this is a reason that most investors have a really bad time. They tend to buy when stocks are really expensive over on this side, and then when things get cheap, they tend to sell and freak out, when the best thing they could possibly do is buy when things are cheap. And if they want to sell, do so when things are expensive. But I think just grasping this pendulum idea and realizing that it's natural for us to have swings to both sides and not to be upset when things are cheap. In fact, to consider buying when things are cheap. That's when most other people are selling. But, you know, to be a great investor, you don't want to use common sense, because the common sense, the common condition is ignorance and stupidity when it comes to markets. And so what you really want is uncommon sense. And I believe what uncommon sense is these days is not being fearful and not freaking out, but kind of keeping your head about you and keeping calm and, you know, just being more thoughtful about what's going on. So, you know, that's the first part. I just wanted to talk a little bit about what the markets are like in my own experience. And I'd also say that, you know, by and large, I just invest in a broad-based index fund. So for my month-to-month investing, I usually stick to something that is really simple and that I don't have to overthink. And so for that purpose, I like a broad-based index fund. I like VTI, which is Vanguard's Total Stock Market Index ETF. But you know, there are other index funds or index fund ETFs like VOO, which is the S&P 500, or VT, which is the Total World Stock Market ETF. These are all great index fund ETFs, and you know, this video I'm talking about Google. And the reason that Google came to mind is that, you know I'm doing the dollar cost averaging into ETFs, but every now and then, I like to invest in companies that I understand well and that I think are selling at a real discount to what they're worth. And, you know, there are maybe 10 companies that I understand pretty well. And of those 10, there are about 5 that I understand really well. One of them is Amazon, and I already own stock in Amazon. So at this particular moment, since I own a bunch of Amazon stock, I'd rather put more money into a company that I think is equally strong, but that I don't have any stock in yet. And Google is one such company. I don't own any Google stock directly. I own some ETFs and those ETFs own Google. And when I say Google, I mean Alphabet, but it's the same thing to me because I've always thought of Google as Google. But it's the Alphabet stock. Anyway, I've just noticed over the past several months a few real interesting things about Google, and I want to share them with you. The first thing is, I realized that Google's in a real interesting place. I'm looking at the YouTube side of it. You know, with a lot of other companies who create content like Amazon or like Netflix, they have to pay a lot of money, billions of dollars every year, just to purchase the content to put on their platforms. But YouTube's in a real interesting position because they have, you know, millions, maybe hundreds of millions of content creators who make videos and put them on YouTube, and they don't charge anything. YouTube pays a certain percentage of those people who get monetized, a percent of the ad revenues. But for a lot of the YouTube videos out there, you can think of this as content that's created for free, and it's something that YouTube is able to share with the whole world community of YouTube viewers. So I think that's a really strong part of YouTube's business model, is that they get all this content and they get so many people watching videos, and I just see viewership, if anything, going up more and more as the total addressable market of people are going online more and more and using mobile devices. So anyways, I feel as though Google and YouTube are here to stay, and I see their businesses getting stronger over time, and I have very few concerns about the durability of their business model. So now let's just take a look at the valuation for Google stock. Let's go back a year and a half, okay, to December 31st, 2020. Now, one share of Google stock then cost $1,751.88. At that time, the earnings per share for Google were $58.61, and the price to earnings ratio was 29.89. Okay, so now if we fast forward to just about 3 months ago, this is on March 31st of 2022, all right? The share price was $2,792.99. So that had increased more than $1,000 a share. The earnings per share were $110.53. So they had doubled since a year and a half earlier. And the price to earnings ratio was 25.27. Okay? So the PE had come down a bit as of 3 months ago from a year and a half ago. So the PE 25.27. Now, and we're in June, it's June 16th as I record this. Now the share price is $2,131.95 as of the close of the stock market today, June 16th. The earnings per share for this current quarter haven't been released, but I just looked online at the price earnings ratio for Google stock as of now, and it says 19.97 price to earnings ratio. So this has come down considerably since just a few months ago because the price of Google stock has come down, and the assumption is probably based on the last quarter's earnings. So when you look at the PE ratio of 19.97, that is close to the 5-year low of 19.7. It's practically exactly the same. So anyways, what this signals to me is that Google is selling at or very close to its 5-year low. Meanwhile, the earnings per share that Google has been making have been increasing almost every year over the last 5 years. So I think this is one of those very interesting moments where the stock market is freaking out and stock prices have swung all the way over to this side of the pendulum where they're actually getting really cheap. And I think this is a good opportunity for a patient investor, someone who's, you know, willing to hold these stocks for 3 years, 5 years, 10 years or longer. It looks to me as though the price right now is really low compared to the earnings that you're getting in return. And again, I think there are many other companies that are providing a really good stock price in comparison to the earnings. But as I said, I don't understand all the companies out there, and I try to stick to the stocks where I understand the company. And I already own some Amazon, and I already own Berkshire Hathaway, and so I'm just looking at stocks where I feel though they have a durable competitive advantage and they're going to be around for a long time. And then when I can find those selling at a steep discount, I really look at that and I focus on it and I try not to miss that opportunity. So I think there's a really good chance that in the next week or so, I'm going to be buying some shares of Google. And it'll be the first time ever for me to buy Google, Alphabet. But you know, for me, I just think this makes a lot of sense, and I'd rather be a buyer when things are really cheap, especially at a time when other people are being fearful in the market, because that is the signal to me that it might be a good time to consider investing. So I hope this info is useful. Please consider giving it a thumbs up. And if you haven't already subscribed, please subscribe to this channel, and then you will get a heads up when I make more videos like this. Let me know in the comments below if there's anything in this video that you found interesting, or what you think of Google as a stock or as a company. And I look forward to hearing from you guys, and I also look forward to seeing you guys in the next video.